9 weeks. That's how long stock markets around the world have been moving up. But 2024 is shaking things to the core with the big meeting minutes just around the corner. We've also got jobs numbers coming through, but as we all know, the stats for the first 5 trading days of the year can dictate what happens to your investment and trading portfolios throughout the rest of the period. More importantly, what about earnings season? It's just around the corner. So with big flash sales across some of the biggest stocks in the world, including the NASDAQ, have we seen supportive dark pool transactions? Today, we'll talk about all of those, along with what dumb money is doing, and more importantly, whether we've just seen a canary in the markets that should make us worry for the months ahead. Well, welcome back everybody to the Daily Show where we talk about stocks, commodities, and cryptos together. My name's Tom, and if you like anything to do with markets, remember to subscribe and smash that like button. There's a lot to cover in today's video. Starting off, first trade day of the year. What did we see? Massive sells in tech, massive sells in the Magnificent Seven, and a move that continues into defensive stocks, something we alluded to on our weekend video. What about fear and greed index? Well, I think it comes at no surprise. We've been talking about this for a while, that everybody's a little bit too bullish. Extreme greed is reading, and we've got every single indicator screaming at us that markets are overbought. But I think something more sinister is possibly happening in markets underneath the hood, and that is the move to defensive positions. Healthcare, utilities, and staples. Take a look at the big three. Wall Street tends to hide in these before they sell off markets, and we saw it happening over the last 5 days, and that has continued in the trend. Have a look at the last 5-day rolling average, and you'll notice that other than biotech, one of our favorite sectors of the back end of 2023, has been utilities, healthcare, and staples. Defensive, and markets are still consolidating. Now, the S&P 500 didn't sell off much, but it was the NASDAQ and AAPL that we'll be looking at later on today's video, along with some of the reasons why this may have happened. But do remember as well, for 2024, to subscribe to our VIP free weekly newsletter. We've got some great stats and data coming your way, including some amazing stuff about the first 5 days of January and what that can allude to for the rest of 2024. Let's talk dumb money confidence now in terms of the indicator. We've already brought this up a few times on the channel about the fact that when we get this high, we've got to be ultra cautious in the markets. These are times that often we rotate into different sectors and we stop looking at the number one kind of stock area that every retail trader does, the Mag 7. So what's happening at the moment in markets? Well, we've seen a huge read on dumb money confidence, and of course that's leading into these types of stats. Now, we don't have too many data points for this, but I think the interesting thing here is it's a time that we usually should be cautious. In fact, similar reads only 33% of the time were markets up 1 week, 2 week, and only 17% of the time were they up 1 month later. Now, unfortunately, we don't have as many data points as we'd want for a stat like this, so you have to take it a little bit with a grain of salt. But when you're building an evidence package to do with what's going on in the markets, of course, it can be helpful. Here are just some of the last reads. 3-month pullback, moderate rally, then a bit of a plunge, which happened, of course, before 2020. And then after 2020, when we got a similar read, it kept driving higher. So we've got big sells, 3-month pullbacks, and one that didn't do anything. Like any stat, you have to bring it together and ultimately use price action and technical analysis, which we do on this channel together, to try to figure out whether we've actually got a real problem on our hands. Now, Russell 2000 daily seasonality. Now, this is something that's really important because, of course, we expect the Russell to outperform things like the NASDAQ and S&P over the next coming month to month and a half. Generally speaking, if we're talking about January up days, you can see that the first trading day of the year, it's not very good, is it? It usually goes down, and it was down again. The NASDAQ might hold the key here, though, because we're seeing some support areas, and you'll find this when we talk about dark pool activity later on today's video. But see this, basically what we have to expect is that if we're going to have a good January, we really should be seeing the Russell perform a little bit better over the coming days. Will it do so? Let us know in the comments down below. What are your thoughts, and what do you think is going to happen for 2024 ahead? NASDAQ 100 mini hedge positions. Now, momentum is, of course, an incredibly important stat, and we've seen a huge amount of big bullish momentum. Breadth has improved. Everything's looking much better for these markets. But look, all markets need to have a resting point. And this is something that we're starting to see from a bearish argument standpoint. Remember, pretty much all of November into December, we really didn't have too many negative signs. Now there are some starting to appear in terms of cracks. You can see here hedger positions in terms of the Dow, the NASDAQ, and the Russell have all exploded, which may mean that we're kind of starting to sit at a point where it's going to be either chop or we're going to see some kind of blow off. But buy the dip rallies may just be kind of like a little bit more lackluster than what we've been seeing over the last couple of months. And I'm thinking that that might be what we're starting to have here for 2024. I mentioned, and we all know this together, that 2024 is most likely going to be a pretty interesting trading year due to the volatility of election years and everything else. So let's now talk Wall Street targets, because 2024, if we're taking the average of all of the economists and equity strategists around the world, they're only looking at 1% above current levels. Now, there are some people like Tom Lee that obviously have 5,000 plus numbers in their mind for the end of the year. But overall, you can see here how the market has trended with these particular strategists' calls. It pretty much trends in line, and you can see the upping and the downing of position values that happens actually in the market over this period. We've got some CTA data that's coming up as well from Goldman Sachs that could be very interesting for the next couple of days, though, in terms of what the big CTAs are doing. Let's talk 5 trading days of the year. Now, this was probably the number one stat of 2023. What happens over the first 5 trading days can have massive impacts for the full year. We've just taken a couple of the previous years here, and you can see that we have day one, etc., all these negatives and positives. But have a look at the first 5 trading days. If the first 5 trading days are down negative 1.9% 2022, look at that year. Now, it's not just this period. You'll see with the stats that we'll release later on, depending on how the first 5 days end up trading, how important this period of time is going to be for markets. And it's just one of those stats that you want to apply. So we already know that the first 5 trading days of the year matter. As we've seen already before, if the Grinch had come in 2023, that would have been a very bullish sign for this year. Some of these stats really matter. And another one is the 2-month stat, which Wayne has done some great details on here. As you can see, it tends to be a very important time, and that's between November 19th and January 19th in terms of setups. Depending on what happens here, we can see amazing years for 2024 or possibly a little bit more negative. So bringing these stats together could tell us a lot about what's ahead for the coming 11 months after we get those reads. Stick around on the channel. We'll report it as we get those stats coming through. What about growth versus value? 2022 was about value. 2023 was about growth. What will 2024 be about? The point of bringing this chart up is really just to show you that rotation and timing is everything when it comes to markets. Only a few months ago, TLT was a meme. Now, all of a sudden, everybody loves treasuries. And it just shows you that sometimes when things are oversold, they can come back. There's an options metric that we saw the other day, and in our private market masters club we've been speaking about over the last 2 weeks, where you'll notice that a hated sector suddenly became really good. And it just shows you that you've got to be looking and thinking differently. One of my favorite investors of all time said you've got to think like a pig, because you've got to think differently to a bull or a bear, and instead start to say, well, what are the biggest players doing? Where's the money movement? Where's the flow? These are things that we're starting to, really break down here on the channel. So remember to follow in 24. We'll be covering it in even more detail as we explore the options markets together. Let's talk NASDAQ now, because of course we did get one good read for the bulls for 2024, and that was a huge momentum breadth move. Basically, when we tend to see these types of moves, we can go sideways to even down for a little bit, but we tend to have nice leeways. Now, we don't have too many of these reports because they tend to lead into massive bull runs, but it does keep you optimistic for 2024. Pullbacks, probably even major ones, may be met by bull demand, because remember, the street is expecting 7 rate cuts. Who knows whether they can get that or not, but that's what the street's expecting. And up until the rate cuts actually start to come through, markets will often be relatively bullish. When the rate cuts start, though, then things start to change. And I've got some great stats for the next video, so yeah, you'll be interested in that one. Let's have a talk here for the S&P versus CTA positioning. Well, straight away, we can see CTA positioning dropped off, and this is leading into Goldman Sachs actually telling us that in all of their models at the moment, they expect CTAs to either remain kind of like flat, down a little bit or down a lot. Now, that's a big change to where we were only 2 weeks ago, where CTAs were buying up pretty big. Another huge change has been positive gamma exposure. That's actually gone back to kind of the more neutral line in only 1 week of trade. And this shows you all those options expirations and also the matrix really switching up a lot here in options. And that's telling us that we have to kind of rewrite the book on how we see this rally and how we see movements in the options market over the next month. We'll be updating you as we get more reads on that. Let's talk dark pool activity. Now, we already knew there was some big trades in Apple and it led to a massive sell-off over the last 24 hours, but we did get some signs of potential support. Take a look here. We've got ProShares TQQQ. This is a triple leveraged Q fund that just found this big trade near the close. Now, this could be supportive, and it kind of tells you that maybe we'll see a little bounce. As remember, at the moment, we really have the BTFD effect in markets. How the markets start to build structure, though, will tell us a lot. It's hard to stop a freight train from going up, but we can start to get signs from how the recoveries come through. And this is a very important point for the NASDAQ, which we'll see later. Here's the AAPL read that we put into our weekend video, and it's a bit of a shame I didn't actually cover the stock because, as you can see here, we ended up dropping heavily off that level, and we came down to, again, some important points for AAPL moving forward. But there have been a lot of trades, and it starts to lead you into whether that was all part of a huge distribution. What do you think in the comments down below? Do you think Apple is the canary for these markets, or is it just still in some kind of profit-taking consolidation? Let's move over to the options now, and as we can see, it was a fairly large options day considering the time of year. Usually this time is liquid, and we tend to see large moves just because of the liquidity. But you can see here, today's total option volume was 36.6, average is 39, and in general, retail traders made up around 29% of the single legs. Have a look here at the unusual trade volume, though, in terms of activity. Now, you'll notice there were some positions that were weird, like things like Cisco here, massive calls coming through, 5.2. But the one that I want to bring up quickly was, of course, Moderna. Because although it wasn't an unusual or super unusual day for it, 2.54, it was a huge percentage day. So 13.1%. We saw healthcare become the hottest sector. Now, I saw this on Pfizer in particular and Moderna, where we went into what we call a capitulation style trade, a market that was so oversold and so sold for so long that it went into basically a full-on wipe. Then we saw a rally from that point, and it was something that I guess is quite replicable if you know what you're doing with it. But you can also see it with the options market. The options market started to flick a little bit here, and all of a sudden, all the bears that were in Moderna suddenly became bulls over the last 24 hours. And yeah, they got pretty much squeezed out. It's something that will happen again year on year on year. And I just thought it was interesting to bring up. In terms of overall massive transactions, we did see quite a lot in Apple, 1.45, 771 versus 594. And you can see the rest here. Let's now move over to the overall charts. And we can see here that central bank liquidity injected massively. Now, this is pretty normal for this time of year. It's what happens next that's going to be important. You can see over here that central bank liquidity often drops into that end of the year. Then we get that huge rally in it. And we saw that in 2022 as well. We got that huge rally as the book kind of moves in terms of the way the Fed does things into the end of the year. And you can see that if we start to drop off on central bank liquidity again, that's going to be a big concern for markets. It happened in 22. That led into a sell. We held the central bank liquidity in 23. That led into further buying and, of course, a decent market. So what happens here will be very important. We'll follow along on that story as much as we can. Let's move over to the US 10-year. What's going on in the 10-year? Well, we know that this is a very important set alert level. We've had that for a while, and we saw a potential bounce of yields. Now, yields actually did a pretty good thing over the last 24 hours. They came into the 20 moving average, and you can see they kind of rejected from here, which is fully expected. They're in a downtrend at the moment. Generally speaking, yields have been pressing that negative button. Now, meeting minutes may change the yield curve over the next 24 hours. And I think non-farm payrolls, which is this Friday, will certainly have a massive effect on the dollar and obviously on yields. Now, what this is telling us is it's the first kind of small time structure positive sign for yields. It's kind of telling us that there could be pullbacks to be met by kind of a rally in yields at the start of 24, and it definitely will have some let's say, bulls a little bit concerned and watching it. I still think it's just going to be more of the market just coming back to mean reversion. But do remember that this is the first positive sign we've seen in yields really this entire drop. And what we mean by mean reversion is generally it will come back to the 20 weekly moving average, which is still quite far away, sitting at around 4.2 at this stage. If that happens, markets might fall through supports. And of course, you'll need to be watching it this week quite closely. Another one has been treasuries. Now, we already know dark pool activity on this area of the treasuries has been massive. And of course, that's leading us into thinking there's some profit target taking here around this area. And I think that probably makes sense. I mean, what an amazing return for treasuries. We still expect more in 24 in terms of it doing better, but maybe a breathers on the charts. If we take a look here at the last 2 weeks of trade, they both look kind of negative. And if markets do fall through, I could see it coming back to something like this 93 in terms of treasury movements. From that point, we still expect buyers to be around here, but you'll notice that we didn't quite make a new low under 97.97. So that's a very interesting point to be watching for these treasuries. Island reversal as well is in play, as we mentioned on the previous video. All of this into the meeting minutes. Maybe the market's telling us something. It could be an interesting 24 hours. Let's talk about home builders. Drop off after melting a little bit higher. Still no really big causes for concern. Of course, it's just a little drop in what's been an absolute monster rally. It could be just a breather until we go, let's say, a little bit higher. Dow Jones Transportation Average sitting on demand. So again, is this a double top? We don't know yet. Will it break low? If it does, is that a concern? I would say yes, it is. Certainly something we're going to be looking at, and another one of those lead indicators. But you get the gist. I mean, what we've been looking at here is 2 months of fairly bullish signs, nothing really negative. And then all of a sudden we're starting to go into, there's a little bit of negativity here. And you can see transportations have done this a few times. They've based off, they've found rallies, they've based off, they've found rallies. Will this time be a little bit different? It's usually one of those leads that tells you that something's a little bit sick. Speaking of leads, copper continues to fail at breaking 3.95. We've had this alert for ages, and we've been looking at this area for breakouts and closes of the weekly and dailies. We just haven't got it yet. You can see here the weekly is a shooting star, or hammer, some people call it, or whatever they call it, pin bar, I think. But overall, you can see here we've got the rejection, and markets are still looking a little bit negative on copper. Now, I would expect copper to do better this year because, of course, of usually that Chinese New Year input demand kind of reach, but we're just not seeing it yet. So if we get through these points, happy days. If we don't, then there could be, again, something a little bit worrying on the signs. Dollar index did rally up. This is fully expected. Coming back to the daily 20 moving average is pretty much fine. And we talked about this line down here being an important area for the dollar to find buyers. Have we seen a change of trend? No. Have we seen mean reversion? Not even close. That'd be 103.40. So really the US dollar has been heavily sold off, and expect yields to really dictate what the dollar is going to do. If we see a huge spike up in yields, expect the US dollar to also go up with it, and things like gold to also suffer a little bit, and possibly oil as well to make some big moves. Speaking of gold, the sell continues to be kind of the place here around this level. This is, of course, where we thought we'd sell 2070 to 2075. We already talked about how it got a little bit higher than we expected. This is where I'd expect the market to consolidate, if not move down a little bit more. Most traded zone sits at 2033, so that could be where those sellers are trying to angle for, and then maybe we get buyers back into it. I am still bullish on gold moving forward, but of course we know that the stats after that big blow off led us into this kind of neutralized period, and we're still there. January tends to be okay, but yeah, it's interesting. Oil, now it came up to around those most traded zones, and then it sold off really badly. The weeklies look pretty bad. There was an excellent trade if you got into it over the last 24 hours. Unfortunately for me, and maybe a few out there, I had a little bit higher target. I expected it to rally. I thought we might get into a 74 a barrel and then see weakness after we saw this. But it wasn't to be. It didn't quite get there. And why I'm mentioning that is just because you can see here, patience, react, don't predict. Sometimes you expect oil to go up. We obviously expected oil to go up through here. We expected maybe a little bit higher. We got kind of right into that zone, maybe take a little bit of profit off the table, et cetera, et cetera. But then we had, of course, this huge rally into, or this drop off, and then this rally in. These are pretty clear areas for usually getting those day trade sells. And it's an interesting one, but not quite the pickup that I would have been hoping for. Let's move over now to single stocks, and then we'll go into indices and sectors. And you can see here that Tesla continues to be a little bit weak. Now, this is the heavy traded zone. We were hoping the other day that maybe it'd go a little bit higher, maybe watch reaction here zone. The weekly looks pretty bad. It managed to hold up and not close below that weekly low, which is important for things like the daily. And at this point, we could easily go to the heavily traded zone and then sell off. And you'll see this is across a few stocks. Let's take a look at Apple, because of course, Apple was the big sell of the last 24 hours. Big sell off, 185, moves down, big gap now. A lot of people are going to be bullish on this stock moving in. They're going to try to buy it up. If we do get a rally, then watch this zone for the bears, somewhere around 193 to 193.50. I think that's going to be where the bears sit, because at the moment, Apple actually has given us change of trend for some of the swing traders out there. Now, most traded previous accum zone, that's going to be a very interesting level for where the bulls could be at. So I guess if you're a bull, you're looking for structure down here. If you're a bear, you're probably looking for it to come back up into this zone. And here, you're probably going, what the hell's going on? Fair enough. It's pretty negative looking, but I could see rallies coming back into Apple. Again, what do you think in the comments? Let us know. VIX did spike, then dropped off. Not really the best index to be looking at in 24. We'll be using a different read for volatility moving forward because, of course, the VIX, thanks to zero DTEs, has been slightly broken over the last 12 months. You've got to be flexible in trading and investing, and sometimes you've got to move on from certain indicators. Not completely drop them, but sometimes move on a little bit. Let's move over here to the German 40. Now, you can see here that this is a huge rejection after rallying up. Big rejection off the German 40, coming back to the liquidity level, dropping it from just underneath 17K and selling back down. Is this distribution? That's a question we have to be asking ourselves. It's certainly something we're watching. I don't really have a trade here for the German market at the moment, but I'm happy to have patience and look for better trades in the horizon. I think there'll be something on this German market. It looks pretty good and right for the taking, but I'm not sure which position it's going to be yet. Let's move over now to the Aussie market where I'm from. We're at resistance. I do think it's a good chance that maybe it goes through and breaks up, but a lot of that will come down to the S&P 500. It's come up here once, twice, 3, 4 times, and then almost a fifth. So this is kind of like the fifth or sixth time we've hit into this level. We all can see its resistance. Usually when you get into these zones, you often will get breaks. What I'll do is I'm going to set an alert above this level that just rejected now. And if the market gets through there, I could see the market trying to push towards a 7,800. So the Aussie market, very bullish recently. We've been bullish on it. We're obviously at the second take profit target zone. But if it does get through here, it could get kind of wild for a few weeks. Let's move to the American market now. First up, Russell 2K. Russell 2K, are we scared yet? Probably not. Not a great weekly close. I mean, anyone can see that. Horrible looking shooting star or pin bar. But you can see here that even with the Russell, it's not really super negative until it gets underneath 1975. We're still in a bullish trend. We're still holding things like the 20 daily moving average. We're still very, very, bullish in terms of overall momentum. And of course, the next couple of trading days will matter because we've seen it on those stats we showed before. The NASDAQ, on the other hand, is an interesting one because we do have one of the most biggest trades for a little while on TQQQ, often a day trader kind of big position that goes through. Now, where are we? Well, we're on the daily 20 moving average, which you can see has found support once before. This is a pretty decent support line. We've got some good structure on the left-hand side. We've got decent demand. If we do get good structure on the small time frames, could be an interesting day trade. I think it's worth a watch. Whether you're going to do any trades comes down to your system or whatever you use, but you can see here the structure of how the market's been going at the moment. Still making a series of lower lows and lower highs. Until that really changes, not much buyers have come back in. So important level, watch reaction here. Certainly one we'll be checking out. What about the S&P? Not anywhere near as bad as the NASDAQ. The NASDAQ sold hard. The S&P 500 held pretty firm. Now, while it did sell off, you can see that it hasn't come back down to the daily 20 moving average on the SPX. And on the futures market, you can see it's not even close to that watch reaction here level. So while we are still melting up, it's getting a little bit weaker. This is still a melt up style market. So we can't really turn super bearish on it yet or anything like that. but you'll notice that these are very important lines in the sand. The Nasdaq hit it straight away. The S&P 500 is about halfway down, and same with the Russell. So still pretty supportive of maybe some BTFDs at this stage, and we'll see whether it can get a little bit shaken up in 24. Non-farm payrolls may be the catalyst this Friday. Then we bring ourselves over to Bitcoin, which has continued to be a slow melt, slow coming up. Watch reaction here, still sitting at about 47K, so that's going to be an important area. And I would think that somewhere in this green box is probably where this rally kind of stops. We've been talking about it for a while. We've seen some great take profit targets along the way. We've basically held firm some pretty nice reads, including the daily 20, which barely got it below. And you can see when it snapped that doji and this little rejection week, it went ballistic back up thanks to the spot ETF. So it's still in an upward trend. It's still on its way to hopefully 47, 48, which is our target. And whether we can get that or not, well, we'll find out over the next couple of days. Remember, this week, there are a few things to watch. There are JOLTS job openings and ISM manufacturing PMI at 10 a.m. New York time. Then we have FOMC meeting minutes, which may mix the market up at 2 p.m. Remember, they expect 7 rate cuts. So what are they going to find in those meeting minutes? And then we move over to non-farm payrolls. The big number here generally being the 8:30 a.m. New York time non-farm employment change. Will the economy be weakening? Will it be strengthening? The problem is, what stat do we even want in a Fed driven by economic events? We probably don't want a really hot number. All right, we'll find out very soon, guys. Thank you very much for watching. Subscribe, smash that like button, and remember to sign up for the free weekly VIP newsletter. Bye for now. Have a great day.